Let's introduce our guest. You can see the banner behind me is indicating First Assurance Company Limited. And the managing director of this company is Stephen Lokonyo. He's our guest for the next hour. Stephen, good morning.
Good morning, Eric.
Welcome to the hot seat of the Situation Room.
Thank you very much.
It's good to have you here.
Yes, indeed, and I'm also happy to be here. Yes.
At the First Assurance, insure, secure, assure.
Yes.
Hey, insure, secure, assure.
Absolutely.
You should have said sure. You'll tell us more about it. Yeah. But first, City will welcome you with the day's proverb. So your job, Stephen, is to listen to the proverb and then give us your interpretation.
All right.
Twende.
Our proverbs for the whole of this week come from the Republic of Liberia.
All right.
The oldest independent country on this continent.
Indeed.
Would you have an idea when it got its independence?
I'm not sure, but it could be in the last century.
It was even in the century before that. Yes.
Yes.
It was 26 July 1847.
1847.
Yes.
47.
1847.
Yes, 1847, yes.
Hey.
Yes.
So even by the time us guys were starting to do our
century had
things,
gone by.
these guys had been independent for 100 years.
Yes, and they were given, they attained UN membership in 1945, November the 2nd, 1945. We had not even started thinking of independence. So, should we say it is the oldest?
It is.
In terms of independence?
Yep.
On the
oldest
continent. Yes.
Correct.
During a heavy downpour, this is the proverb. During a heavy downpour of rain, your bucket did not get filled. Do you expect the dew to fill it?
During a heavy downpour, your bucket did not get filled. Do you expect the dew to fill it?
Absolutely not. I do not think so.
Oh, good.
I mean,
Good.
the obvious things here.
That is an appropriate
But then,
response.
It wasn't a question. It was a proverb.
It was. No, it was a question proverb.
What do you think the Liberians are saying?
I think the Liberians are saying that you must make hay while the sun shines. That when it is raining or when you have an opportunity for that matter, you must take advantage of that opportunity at that very moment. Because the dew occurs in the early hours of the morning. So if you do not fill up your bucket from the rain, then you cannot expect to do that in the morning using the dew. So you have to be prepared. You have to get to fill up your bucket from the rain itself. That's what I think.
It's a lovely one.
Good thinking.
Yeah.
It's a lovely one.
Yes.
Make hay while the sun shines. Fill your bucket when the rain is raining.
Yes. Don't wait for the dew to fill your
Don't wait
bucket.
for the dew to fill your buckets.
Yeah.
That's a good one. So tell us about First Assurance. First in what?
Yes. So, Eric, First Assurance, we are fast from many fronts. And we are fast in terms of service to our customers. And we are also fast in prioritizing our customers. So for us, everything is fast. We get customers on board. We make sure that they rank fast in terms of the value that we give them, the services we give them. So that is what First Assurance is. But First Assurance is also about the values that we stand for. That this is a financial services company. Insurance is a delicate financial service. So if you don't get things right, then things can go absolutely wrong, because it's about financial security to clients. It's financial security to our customers. So we have to get it right the first time. That is who First Assurance is. We are a short-term insurer, if I will go just into the detail of what really First Assurance is all about. We are a short-term insurer, which means that we give insurance for general classes. So insurance is split into two lines. There is the long-term insurance, which is life insurance, because contracts are issued for a longer period. Most of them, it's more than 1 year, maybe 5 years, 10 years. But short-term insurance is done on an annual basis.
Okay.
So you take a policy with us, you will have that policy for 1 year. It will then come up for renewal. So this is what short-term insurance is. That is what First Assurance offers to its customers.
How many different products do you have? When you talk about general insurance, it's wide, isn't it?
Yes.
It's general. It's like City and Sons General Stores.
Yes.
It sells everything.
Yes.
Yeah?
And car wash.
And car wash.
Yes. So we have a wide range of products. Obviously, we try to cater for a large spectrum of customers, ranging from retail customers, small businesses, to the large corporates. But we provide products across the range in terms of, assets covers. We provide medical insurance. We provide employees covers. And we provide medical insurance as well. So it's really the broad range of insurance products that ordinarily you would get in a general insurance company. We also have products that are special for the financial sector and for professionals. Yeah.
Those are how old is this company?
This company, we are almost 100 years old.
What?
Yes.
Hey.
This company was started in 1930, but at that time as Prudential UK. So we were a local operation of a UK company. But over time, the company has transitioned through various phases. Around 1980 to the 90s, there was localization of insurance ownership in Kenya. That is when Prudential now sold its shares to local shareholders, and that is how we became First Assurance. So that was the first transition. So we've been in operation for all that time. Previously, we offered both general insurance and life insurance, but then regulation required that we split the business into, separate businesses to offer general and life insurance. So we have a subsidiary or a sister company that does life insurance called ABSA Life. So that separation happened as a requirement by the regulator, but then since then, First Assurance has continued to offer general insurance to the public. We took up the name of, we rebranded to First Assurance in 1991. Then there've been a couple of milestones within the business. In 2015, this company was acquired by Barclays Bank at that time, and now ABSA Bank. And so that makes First Assurance part of the ABSA group.
Okay.
So in this group, of course, you have got ABSA Bank, you've got First Assurance, and you've got ABSA Life. So we are part of an integrated financial group. Really.
So is it wholly owned by ABSA?
ABSA is the majority owner of the business, yes. So we have got other shareholders.
So you bring with you a heritage, 100 years of expertise in insurance industry, many decades of expertise in the local insurance scene, all right? If you look at the years that have passed and where the country is at right now, conversation has always been, okay, are our insurance companies actually attuned to what's happening in the country? Are insurance companies ready to expand and start thinking beyond the obvious in terms of, okay, so the law says that you must have motor vehicle insurance, for example. Yes. So you just sit back and say, you want a motor vehicle insurance? Come, I'll give you third-party comprehensive blah. Or the law says you're encouraged to have medical cover for your employees, so you'll come. The workman's compensation and the other injury covers, those are legal. So you've just been sitting there, because the law says I must come to you. Yeah. You just sit and wait for me. people have been asking themselves, is the insurance actually thinking with the times? And if so, tell us how Fast Assurance is thinking with the time.
Yes. So, Eric, there's been a lot of developments in the insurance sector, and then, as you rightly put it, the world out there is fast-paced, and the insurance sector has actually kept up. You will notice that insurance companies now have moved away from the old traditional setup. So the thinking that insurance companies just sit and wait for customers to come and purchase our services is not the case. In fact, you will be surprised that insurance penetration, which is a percentage of the insurance premium that we collect as the entire industry as a percentage of our GDP, is only 2.3%.
Yep.
In the first world, the ideal position, and even in South Africa, insurance penetration is above 15%. That is really the ideal situation that we should be having also in Kenya. So at 2.3%, we are doing extremely badly, and we have got a lot to do as a market to achieve that ideal penetration. Vision 2030 targets to take penetration to at least 3%. So it tells you that insurance as a product has not been fully maximized as in this country. We have a long way. Insurance prevalence is low, driven by many factors, maybe awareness, education about insurance itself, and availability of the insurance services to the public. So insurance companies have, over the years, actually come up with ways and means to make sure that we improve this penetration. As Fast Assurance, we've invested a lot in educating, the public about our products, about our services. We have expanded our reach across the country. We have got offices in all the major cities. We have got a diverse distribution network. We have brokers. We have got our own agents across the country. This is all in the spirit of taking insurance closer to the people. And then what we have done is also to invest in product development, because one of the biggest challenges has been the relevance of insurance services. In the old days, we had off-the-shelf products. But now, for you really to appeal to your customer, you have to come up with products that are actually speaking to the needs of the customer. Product development stopped being a backroom thing where you are trying to imagine what the client wants, design products, and bring them to the market. We now go out to the market. We engage the market, we research, and we use the data that we have built over the years. And of course, with the coming of AI and big data, we are now able to predict more accurately customer expectations. We are actually able to predict what really matters most to customers based on behavior, habits, and we're actually able to use this data to discern what the customers the right products. We are able to discern the needs. We're able to discern what is important to customers. So product development has changed quite a lot, and insurance companies have actually kept up. As we speak now, in the last couple of weeks, we've been speaking of a new product that Fast Assurance has launched. It's called Fast Bima. It's actually Fast. It's our SME medical product.
I see.
Yes, it's our SME medical product. It's, this is a product that is specific to the SMEs. And when you listen to our CS for cooperatives, Honorable Chelugui, he has said many times that over 90% of registered businesses in this country are SMEs.
Yeah.
So then, as insurance companies, we must really respond this critical sector. And we used now the data that is available. We used the experiences that customers go through as they access healthcare, what really means the most to a corporate or a small business in terms of healthcare insurance. And we came up with a special product for the SMEs.
For the SME sector in health.
Yes.
We'll talk about this in greater
and
detail.
We actually call it Fast Afya Biashara. And I think you've seen some of our billboards out there with a lady with a pair of scissors in her hands. It's that's a typical tailor that, you know, we will deal with in the estates out there. Yes.
You know, innovation speaks of an organization that is keen on trying to meet the needs of its clientele, or an organization that is seeking to be alive to the realities of the ecosystem in which it exists. When you talk about 15% being the threshold you want to reach,
Yes.
what about the other 85%?
Okay.
As a layman, 15% looks to me like a very
looks
low.
small,
It's
eh?
very
It's
low.
still,
It's really, really, really low.
Yes.
But then again, there's a conundrum here. When you have a country where many households subsist on the equivalent of around 6,000 shillings a month, is it possible to tailor-make an insurance product that would meet the needs of such a person? Or do they fall in the category of people who cannot be insured?
Yeah. Okay. First, let me explain the 15% ideal insurance penetration. And I've said that for our country, the target now is first to get to at least 3% and above. So this is really measured in terms of the volume of insurance premium as a percentage of GDP. So it's just a measure. It's not really the percentage of the people who have insurance. It's the value of insurance premium compared to the country's gross domestic product. That's the GDP. But at 3% and above, the ideal, what then you would expect is that at least every household has one form of insurance or another. That at least a household will have either motor vehicle insurance, insurance for the home itself, or health insurance, or a life insurance product.
That's at 3% of GDP.
Yes, that's at 3%. The prevalence of insurance will mean that at least every household will have one form of insurance or another. But after achieving a level of 3%, then that is a level that is considered to be a meaningful penetration. Anything less than that is too low.
And it's been too low in the country for very many years.
It's been too low for very many years, and I did say it's for many reasons.
For various reasons.
For various reasons.
If we look at the Vision 2030, so Vision 2030 is what, about 25-year-old plan, 25-year plan, right? And it was saying, let's grow this to 3%.
Yes.
Have you seen significant improvement or moving of the needle over the years? Now we are on to MTP4 of Vision 2030. We are about to start concluding and reviewing Vision 2030.
Yeah, there's actually been a lot of growth, because when you look at the growth in terms of the premium volumes year after year, there has actually been commendable growth. And in fact, in the last 3 years, the insurance sector has actually grown by double digit. So it's only that it is not growing as fast as we would want it to grow, but it has actually been growing.
What's hindering the growth?
The hindrance of the growth, it's a myriad of reasons, affordability, and you did mention the average income of a household in this country. So insurance sometimes is considered to be a luxury product, but it is actually not a luxury product. It is an absolute necessity. And I will, you started this discussion with a proverb from an African country, but I'll give you a saying by one famous Winston Churchill. And Winston Churchill said that if it were by him, I'm not quoting verbatim, but if it were by him, he would write the word insurance on the door of every cottage and the door of every public man. For from insurance, families and businesses are protected from catastrophes that they would never be able to recover from. So it is an absolute necessity. But why has it not achieved the penetration that we are targeting, with this reasonable penetration? First, the public has got very little knowledge about insurance. And then apart from the little knowledge, we've suffered, of course, in the past from a negative perception of insurance. And this is driven by how we have served customers in the past. So the old insurance approach was to look for ways why a claim should not be paid, or reasons for not paying a claim. But that game plan has changed completely. The mentality of the current insurance company, and I speak for First Assurance here, we look for every reason why a claim should be admitted. You must give your customer the best opportunity to get compensated. So the time for a small print, looking for those tiny clauses or conditions that the customer was never told when they are taking out the insurance cover, those are things that we have discarded completely.
So you want to give me the benefit of the doubt.
Yes.
When I file for a claim, the first thing is, okay, Eric, you're not here to defraud me.
Absolutely.
You're here to make a claim because you're my customer. Let me see how I can walk the journey with you to your satisfaction. Then if you find now I was trying to defraud you, you'll find out.
Exactly.
Okay.
Yes. So it is true that there are still claims that fail to get paid because fraud is a big issue in our market at the moment. In fact, the cost of fraud to an insurance company is usually, on average, maybe between 20 and 30% of...
What?
Yes, fraud is a big issue in insurance companies. So, of course, we have to be careful to protect, businesses, shareholder value as well, but while making sure that every genuine claim is settled speedily and within the expectations of the customer.
Let's take a break. You'll tell us more about that, and also you'll tell us more about the First Afya Biashara, the new product that you've recently launched targeting SMEs. So are you a small business? Listen to this. You plus your employees in that small business can actually get insurance, because someone is saying here, Kev says, medical insurance for individuals is almost impossible. Insurance companies seem to be fixated on big corporates. So this is now coming to start addressing those issues.
Absolutely.
If you're a small micro enterprise, how can you benefit from this? There was also a message that I saw earlier from Washo. Washo says, my late mom worked with First Assurance from when it was Prudential Insurance. She worked for 33 years, and then she retired. They were good employers then. She was the personnel manager by the time she was retiring.
Oh, amazing.
Some good stories.
Story, yes.
Yep. And she says the dad still uses First Assurance. Can't convince him anything else. Stephen Lokonyo is the managing director of First Assurance Company Limited. It's a company that's more than 100 years old, close to 100 years old. It's been in this country for many decades as well. So, Stephen, you've told us about the array of products that the insurance industry is coming up with. First Assurance has come up with a specific product for SMEs, and this is health insurance in the SME sector.
Yes.
Okay, it's obvious it's big because the SME is huge. But then, how does it work, and how is it different from the other insurance products, health insurance products that you have?
Thanks, Eric. This product, first, we have given it a name that really speaks to its purpose. It's a First Afya Biashara. Obviously, first comes from our corporate name, but really this is a product that is targeted at the small, medium-sized enterprises. It's a medical product.
How do you define the small, medium price?
Yes, so these are businesses that have employees even as low as 3 employees. Because traditionally, corporate insurance was offered only to large groups. And large groups, because it was easier to price them, they appeared to make more economic sense to insure because they were large groups. But these small businesses also, when you aggregate all of them, it's a huge base of clients. It's a large group. So for a very long time, the SMEs were excluded from, health insurance or products that are actually suited for them. So what then would happen is that because of the smaller number, their premium would largely be higher compared to the large corporate. So premium per person was then pretty high. So this product, the medical insurance was a very expensive product for small businesses. So we then looked at the reasons why this product was largely inaccessible to these SMEs, and the bigger aspect was actually the cost and the fact that they had such a small employee base. So then we went out of our way now to design a product that then can be accessed by these SMEs. You only require a minimum of 3 employees. So even if it's a family business owned by, someone with his spouse and 1 employee, they qualify for group insurance as an SME. But then what we also did was to cut out the things that are not required by that specific group. And I'll give you a good example here. So if you have a company that has got 4 employees, young men of between 20 and 30 years. Do they require maternity cover? Obviously not. So the things that you don't require, you cut them out. You only buy what really is necessary for that specific group. And if you have a workforce then that is within, let's say, the childbearing age, then maternity cover becomes important. So it is the flexibility of a company structuring its own cover so that you avoid buying the things that you do not need. That way, you manage the cost. You actually reduce the cost.
So there's a suite of services and you can just tick the box. I want this, I want maternity, I want dental, I want optical, I want...
Exactly. So there's usually the health insurance cover is structured in terms of inpatient, outpatient. There's dental, optical, maternity, and many other things. So you choose the cover that you want. So what we have done is that for the First Afya Biashara, we give you that flexibility to choose what matters most to you, and we price that for you so that then you are able to afford that cover. But then what we have also done is to do away with most of the exclusions that would have that would apply to a medical insurance cover. Traditionally, substance abuse, for example, was not covered because it was deemed to be self-inflicted. Mental illness was not covered because it was just traditionally part of those things that were excluded. But what we have done is to bring in all those covers that were traditionally excluded. So this is a very wide cover. And why did we, decide to bring in substance abuse and mental health, for example? It's because of the dictates of the current stressful environment. Mental illness, substance abuse, in many of the cases, they are actually interlinked. And these are, all related to it's all related to the normal course of life. It's a pressure life out there, and these conditions arise and they require medical treatment. So we can actually pay for someone who needs to go for rehab. That is paid for under the policy, and we walk the journey with the member until they are well again. We have also extended the cover to include fertility treatment, for example, and IVF. Many occupations now make it difficult for couples to conceive for many reasons. Some of them, of course, are medical conditions. But if IVF, for example, is required by someone who has this cover, we actually provide that, we take care of that cost. So we have made this cover very responsive, affordable, it's wide, you can go abroad for treatment, and then we have high limits as well. You can actually have an inpatient, outpatient limit as high as 500,000. So it's a product that is really flexible. It's a product that is responsive.
500,000 per person or per the group?
It's for the group.
For the group.
Yeah.
Okay.
Yeah.
Somebody's asking.
Actually, no, it's per person.
It's per person.
It's per person. Yes.
And then for inpatient, what's the minimum?
For inpatient, there's really no minimum. You actually choose what you can afford, but reasonably inpatient would start from 1 million and above, just for it to be reasonable enough.
Okay. Somebody's asking, Kev is asking, so what would a typical premium range look like for a 3-person cover?
Yeah.
3-employee cover?
Yes, so the typical cover would possibly have cost upwards of maybe 300, 400,000. But this is a cover for a membership of about 3. You can actually access cover for less than 100,000 shillings. Yeah.
Yes. With all those benefits that you talked about?
Yeah, with all those benefits. What then will happen, of course, is that you will have to structure that in terms of the limits that you are taking. So you take reasonable limits for really what you require the most, and then you discard what you do not require. Then, then we're able to squeeze that within an affordable price.
Can you structure it per employee? You may have some employees who are in childbearing age or look like they'd be interested in maternity, and then others who may not be interested in maternity.
Yeah.
Somebody who'd be interested in dental for this year, someone else may not. Can you keep structuring that and shifting it?
Yeah. So benefits, once they're chosen for a scheme, the benefits will apply across
for the group.
For the group.
Okay.
Yes. Yeah.
Okay. The big issue with insurance, particularly health insurance, is the facilities that you have contracts with, right? So many people will say, okay, so if I take this particular product with Fast Assurance, can I go into any facility and produce my insurance card and they'll accept me, or am I going to be told, hey, anyway, yeah, to Jui?
So I compare medical insurance to your bank account. So when you buy medical insurance, take it that you've bought a cover of 500,000 shillings. That's like your money at the bank. So we have got a wide range of partners that you can access services from the the low cost facilities to the most expensive facility in the country. So we do not restrict the customer from accessing healthcare across that range of our panel of providers, be they hospitals, specialists, and other facilities.
Pharmacies, labs.
Yes. We do not restrict. But what we advise our customers is use your limit carefully, the same way that you would use your cash from the bank. Because when you're unwell today, use it carefully so that you get the best health care, but at the most reasonable cost. So that if you fall sick again tomorrow, you will still have some benefit to go back to hospital. So we have got a diverse range of service providers. You are not restricted. You can go from the cheapest to the most expensive.
The best way of prudently using your health insurance would be, in my opinion, having a health checkup.
Yes.
But then the insurers will come with something they call pre-existing conditions, which immediately reduce what it is that you can access.
Yeah.
But the problem begins before then. Would First Assurance allow me to actually go to hospital to get myself a thorough medical checkup? I'm not talking about one of these 1-hour checks where they look at my eyes and nose and teeth. No. Spend a night in hospital, if not 2, so that they check everything.
Yes.
Because it'll cost the insurer much less than if I do not have that condition and then I later fall ill with that condition, now then the cost really becomes, should we say, burdensome to the insurance company.
Exactly.
Would First Assurance accept that I, their client or their customer, can actually go for that checkup?
Charles, yes. In fact, we actually encourage anyone who is insured with us under First Afya Biashara or our other medical insurance covers. We actually have a facility for you to go for a health checkup at least once a year. So that is very important for us because, as you correctly put it, it is really, when what do they call it? Is it to be forewarned is to be forearmed?
Yes.
So you are better off getting to know about some of these things early enough. Early diagnosis for some of the illnesses actually enables a patient to get fully treated. And, for example, cancer, if it is caught at a very early stage, then there is actually a chance of getting fully cured. So we do encourage that. We actually have that cover under our First Afya Biashara and our other medical insurance products that we have. You can actually go, and we encourage our members to go for a medical checkup at least on an annual basis.
And it will be part of the cost of
yes,
what
it's part of the cover
part of the
that you have
cover
purchased from us. Yes.
Okay.
So it is not an additional cost.
Then the issue, Stephen, comes of the pre-existing conditions.
Yes.
So you hear many times people complaining and saying, I went for a medical checkup. I was diagnosed with this or the other. I was diagnosed with cancer. I was diagnosed. And then I started now going for treatment. The insurer said, no. Read the fine print, my friend. Boss.
Yes. So what has happened, Eric, is that, and this is even being driven from a regulatory perspective, that insurance companies must treat their customers fairly. Pre-existing conditions are covered. What then becomes a problem for insurance companies is a customer who once then knows that they actually need insurance for a particular ailment, then at that time then comes and takes insurance to take care of what they already know. That is usually because insurance in itself, it's meant to work in good faith, that you are actually bringing to the table a risk that is and incidences arising out of it will be unknown to you. They will be accidental. We call them fortuitous. So there are things that you also do not know about. But when you've already known about an ailment, then of course the terms to cover that will be different, but they are not necessarily excluded as long as they are declared when you are actually taking out the insurance cover. Because remember that costs that are certain at the time that you are taking the cover need to be built into the pricing of what we are selling to you. So what you then are obligated to do when you are proposing for insurance is to declare the things that you already know,
Right.
so that the insurance company knows about them. It then is able to price for these pre-existing conditions, and you are actually able then to continue with your treatment. And look, we also have customers who have insurance cover from other insurance companies, and then they wish to move to First Assurance. And a patient may be dealing with a chronic condition. You cannot then tell the customer that because you are already dealing with a chronic condition that you won't cover it. No, it forms part of the cover. So pre-existing conditions, chronic illnesses, all those things, they are covered under these covers.
Why is it that for chronic conditions or pre-existing conditions, you only are able to cover up to 10% of whatever cover someone has taken? Why 10%?
It's not actually a 10% as such, because all it depends really is on what limit you would want. Because when you do not, let's say price it separately, then the standard would possibly be up to a certain percentage. So in the expectation that, of course, these chronic conditions do arise. So it is capped when you do not, specifically ask for a larger limit. But it is actually not. It is not a hard and fast rule that it has to be at 10% or 20%. You can actually have cover for chronic conditions up to the full, policy limit.
You can?
Yes, you can.
And that is what First Assurance would assure me of?
Yes.
Okay.
Copay.
Yeah.
So some service providers will tell you that this insurance cover the product that you have requires copay. What's copay and why?
Yeah. So copay is ways of managing behavior in terms of how you use your medical insurance. So what we want to achieve here is participation from the patient in the costs incurred. That way, it then helps us to make sure that for the really small ailments like a headache, a cough, you do not have to go to a hospital for that. You can actually buy these drugs over the counter. And we actually have facilities now where you can actually be attended to in a pharmacy. You don't have to go and see a specialist. But copay is just one of those features that are used by health insurers to manage the cost, behavior patterns, and just to discourage frivolous visits to, if I may call it that.
Even in this country,
yes.
If somebody takes themselves to a hospital, you should reward them. Our care-seeking behavior in this country is low and it's poor.
Yeah, true.
So if somebody goes to a health facility and they're saying, I have a headache, this is somebody who has actually thought, okay, I have a headache, I want to get checked.
Yes.
How can you encourage that person to, yes, use their cover, go to that facility, but maybe the facility can advise them. This, if it's a headache, why don't you go here? Or do the basic checks.
Yes.
Telling them to copay, now that starts telling them you must be taken to hospital. Okay. If you are sick. If you take yourself to hospital, you'll pay.
Okay. So Eric, like I said, insurance in itself is not cheap. It's actually quite pricey. So in some of the cases, we actually have scheme sponsors like employers who actually opt to manage the ultimate cost of the entire premium that they pay. So a corporate client can come to us and say, okay, I would like to buy this cover for my employees, but this is how much I would like to pay as premium. So in some of the cases, then a client can actually propose that instead of charging me the premium that you have charged, can I take up part of that cost so that they actually get a premium reduction. So part of it also is a way of managing the cost of the scheme itself. So copay is very useful for that.
Okay. Yeah. So somebody who has heard now this morning about this new SME health insurance product, First Afya Biashara, and they'd like to get into it, how do they do that?
Yeah, we've got various ways of accessing this cover. First, you can access it from any of our offices. We have agents across the country. We've got offices across some of the main cities. We have an office in Mombasa, Nakuru, Kisumu, Nyeri, and Eldoret. And we've got 2 other offices in Nairobi. But a client doesn't actually need to visit our office. All a client needs to do is just to go to our website or just drop us an email, request for a quotation, give us the details of the employees that they want covered, and we will submit, very quickly a proposal to the customer. So we've got many ways of availing this product to our clients. In fact, we have invested a lot in, infrastructure. You really don't have to take a bus ride or drive to any of our offices. Just drop us an email, give us the details of, the people that you want covered, the limits that you would like, the benefits that you would want, and we'll give you a quote.
And somebody will call you back and walk the journey with you.
Yes.
Stephen, thank you very much for joining us. It's good to hear and learn that the insurance industry is now thinking outside of the box.
Yes.
Mulikuwa kwa box ya mabati.
Ambayo ina kelele.
Kelele. Stephen Lokonyo is the managing director at First Assurance Company. He's been here with us telling us about the future of Kenya's insurance sector.
This is the Situation Room, the only way to start your day.